Well, I hope we're broadcasting. Good morning, good evening to wherever you are in the world. Welcome back to another coffee hour. Today we got a jam-packed episode, really jam-packed. There was a lot of news, definitely want to cover. I'm going to start including a little bit of crypto here and there. I'm not going to fill the stream with a lot of crypto stuff because honestly, like I personally just follow Bitcoin. I don't really follow anything else, but there is a lot of interesting stuff happening in the crypto space. So I think starting in the next couple of streams, I'll probably start including maybe a little, piece of news here or there, because I think, at least with some coins, they're becoming more prevalent, especially like the whole stable coin thing. So I'm going to start including at least a little bit of crypto news in the future. So really excited about that. Got a lot of stuff to cover today. We're going to be talking a little bit about NVIDIA, some Palantir, some data center stuff, some AI, artificial intelligence things. So we got a lot to cover, man. We got so much to cover. So anyways, before I get started, my voice is cracking already. Let me get a quick sip of coffee, and then we'll get started on the stream. All right. So let's get going. Alex, what's up, man? Hey, thanks for joining the stream. Let's see what else we got. All right, cool. I posted that poll in the chat, and man, someone was super quick to hurry up and click on hell yeah, crash and burn. So I thought that was really funny. Like the second I posted that poll, it already went to crash and burn. All right, guys, let's get into the stream. All right, so right now, portfolio is sitting at a decent value. I'm only down $52,000, which is, kind of nice. Over the weekend, not a whole lot of like updates were coming out. There was some news, from, the president basically saying that he's, working with China and that, because there was a reporter that asked, and I wish I saved the clip, but there was a reporter that asked, what is going to happen after those 90 days are up, because, that is still on the horizon. That's still definitely a risk, that tariffs could get bumped up. But the president, reassured everybody that, hey, he's going to be kind with the tariffs, so that could signal probably a lowering, if not, a softening on the whole tariff stance. So we'll see what happens in the next 60 days. But anyways, portfolio update, we're sitting at, just a little over a $52,000 in the red. Dividend stuff, constantly changes from time to time, depending on what the payout distribution is or whatever. So right now we're sitting at an annual net income of 33,000 still. April income's pretty much finished for this month. So I'll be doing a dividend portfolio update once I collect the final two dividends, which will be from PLTW and NVW. So I'll be doing a video on that in the near future. So other than that, portfolio is looking good. We're not trending back. We're not trending, back south. We're not heading to all-time lows again. So I'm really comfortable with where the market is heading. So speaking of market, we're going to talk about the fear and greed index. We officially moved out of extreme fear and we're now just in regular fear. So we're sitting good. This is a good change. This is a good, direction that we're heading in, that the total market is heading in. It seems that a lot of investor sentiment is turning positive, despite there's still a lot of negative news out there. And I mean, let's not kid ourselves. I mean, you read about it and see it all the time. There's still a lot of negative news out there. Things for recessions, slow growth, economic collapses, trade wars, the devaluing of the US dollar, the reserve currency of the world is, going away. All this, there's so much negative news out there, but it is still good to know that, the stock market seems to continue to pump up. Interesting thing about like Tesla, Tesla had really bad news, but that didn't matter. Earnings and all that stuff went right out the window and people were buying Tesla, and Tesla stock was pumping just based on the news that Elon Musk was coming back to control, basically take over or get back into the flow of things for Tesla. So again, this market right now is super irrational. It seems to be just really driven off news. Earnings and all that stuff seem to be going out the window, but whatever. I digress. So anyways, we're moving into, we're in the middle of fear. Hopefully we get into neutral. Again, markets seem to be calming down. Things are a little more predictable. There's still a lot of uncertainty with the whole trade war, especially with China. It looks like, and I'll be getting into this in a little bit, but it looks like India is probably going to be the first one to strike a deal with the United States. Again, India is a pretty big trade partner. Not only that, Apple has been in talks with moving a lot of their manufacturing of iPhones and their products to India. So they're moving away from China, which, is probably a big hit to China because they've been manufacturing iPhones for years and years, probably decades at this point. So that was in the news as well. This is going to be a big week, guys. A huge week. Oh, look, what do you know? Some new breaking news already. Let's take a look at this in a second. But we have some big news coming out this week. This week is going to be super choppy. I think it's going to be super choppy. We're probably going to have a lot of bumps. And the reason is because we have on Wednesday, we're going to have some news come out for PCE, the core PCE index, inflation, blah, blah, blah. So this is what we're projecting, or this is what was it? The previous one was? Yeah, that was the previous. And this is what is projected. So hopefully we go down. Hopefully we're trending downwards. Last month this came out and, the markets reacted very positively. Hopefully we continue going down. So as long as core PCE continues going down, that's the inflation piece. That's the stuff that we want to see. We want to see it going down because that's going to set us up for, the Federal Reserve to lower interest rates, right? Lower interest rates. There's still a lot of talk on whether they're going to be doing 3 this year or 2 this year. I'm in the camp that we're only going to get 2 Fed cuts this year. There's, some people that are betting, if you look at the CME group, there's people that are betting that there's going to be 3 rate cuts this year. I just don't see that happening personally. I just don't see it happening. May 1st, we're going to have the initial jobs claim, which again, if this comes bad, if this is negative, then we, because this has to do with like the whole economy and people not having work. And, these are jobless claims. So if this rises, that's showing that there's a slowing in the economy. People are not working, which is not a good thing. May 2nd, we're going to have the unemployment rate. Again, a healthy unemployment rate is between, 4.5%. To about 5 from what I've heard. So if that goes any higher, who knows how the market's going to react. There was still a huge amount of people who left the federal government, but they had this really long runway up until September to leave, right? So those numbers haven't been baked into the unemployment rate. But if, we see more people unemployed, more Americans not working, that's obviously not going to be a good thing, right? So that could rattle the markets, and we could probably, go a little lower. But not only that, if we're looking, someone in the Discord, Cody, he had posted. Citizen of the Year had posted earnings for this week. So the 3 big ones that I'm looking at are Microsoft, Meta, and Amazon. These come out this week as well. These will be after the stock market closes. So these 3 are really going to give us, a picture of what's going on in the broader market. And the reason why I say that, these are 2 big tech companies, right? Microsoft and Meta, but Amazon is a huge retail company. And if they are predicting slower consumer growth or consumer spending, then that will give us a really good sign of what's going on in the broader market, right? What's going on in the broader economy. Microsoft Meta, I'm really interested in to hear what they have to say about, their AI data centers and their focus on artificial intelligence. I really want to hear what they have to say about that. Microsoft, again, canceled a bunch of their leases recently, for leasing data center space. And then Meta and Amazon picked it up. So, or it was maybe Meta and Google, but one of those 2 companies did pick up those leases. So, there's still this whole talk of like the AI bubble popped, data center demand is declining and all this stuff. I don't believe it, not for 1 second. I think if anything, data center demand is going to go up, and because of, the whole AI thesis, artificial intelligence, becoming way more widely adopted by not just, consumers, just you and I, regular people, but also by commercial companies. And then not only that, governments and eventually, militaries. So I think, this whole AI bubble pop is kind of overblown, just my thought. And that's why, I'm kind of invested into something like a Palantir or even NVIDIA. All right. So we have that coming up Wednesday, May 7th. That's going to be the big one. All right. This is the FOMC meeting. And this is when they're going to announce about probably the rate cuts. So hopefully we get a rate cut in May. I'm pretty hopeful that we do. If not, then I don't know what's going to happen. So yeah, we have a jam-packed next couple of weeks, especially for news, especially for earnings, and especially for economic data. So just want to take a quick look at this. This is brand new. I didn't even see this earlier. So this was updated. Yeah, this was updated late night. Trump eases impact of tariffs on U.S. automakers. I'll have to read this later. But yeah, this is probably going to send the markets up tomorrow. This is probably going to send the markets up. This has to do with Canada and Mexico, definitely with Canada and Mexico. Oh yeah, I'll have to look at this later, but that's interesting. All right, so IBM pledges $150 billion to boost U.S. tech growth, computer manufacturing. All right, there's always this talk of, all these companies. You have Apple, you have Stargate, the Stargate project, basically pumping, billions of dollars into the U.S. economy to build up all this manufacturing, to basically build up all this artificial intelligence infrastructure, to build up these data centers. So there is a lot of money being pumped right now into the U.S. market. And this could be seen as a tailwind for sure for, again, the AI thesis, investing in AI. You could look at AI ETFs. There's a couple out there. You can look at AI specific companies. The biggest ones, really, if you want to just buy the biggest ones, they're usually the Mag 7. So like Google, Microsoft, or Amazon. But if you want to look at other companies out there, I think there's, obviously Palantir is a defense AI artificial intelligence company. But you also have, I think, Anthropic, if I'm not mistaken. I could be wrong there, but I think Anthropic. But anyways, IBM announced a $150 billion investment into the U.S. over the next 5 years. The funds include $30 billion to advance American manufacturing of its mainframe and quantum computers. All right. The company announced the Z17 artificial intelligence mainframe earlier this month. International Business Machines on Monday announced it will invest $150 billion in the U.S. over the next 5 years, including more than $30 billion to advance American manufacturing of its mainframes. All right, this was the whole, tariff thing, basically forcing companies to onshore manufacturing here in the United States. And this is, some of the outcomes of all that tariff speak, right? Why pay a tariff when you can just manufacture in the United States and get that tariff completely removed? So this is, kind of part of the whole bigger plan, I think, in my opinion, to corner the market and corner the technology market, to continue the American dominance in technology, right? This is bringing all manufacturing back to the United States, not relying on anyone external, and just basically owning that entire market. The company's announcement comes weeks after President Donald Trump unveiled a far-reaching and aggressive reciprocal tariff policy to boost manufacturing in the U.S. as of late April. IBM said its investments will help accelerate America's role as a global leader in computing and fuel the economy. The company said it operates the world's largest fleet of quantum computer systems and will continue to build and assemble them in the United States, according to the release. So I don't know about investing in IBM specifically. I never looked at them. They're a very, very old company. I think they're like a 114-year-old company. So I don't know. I just never looked at them. They don't have, like, I don't know. They don't have that appeal for me. But there's other companies out there that are involved in quantum computing. So I just wanted to at least make you guys aware of this, in case you've never seen them. But some of these are available on the stock market. There's a couple ETFs out there that are, based, strictly on quantum computing. Jensen Huang, during his big event, was talking about quantum computing. He said he was actually surprised that there was a lot of companies already engaged in quantum computing and research and development. So that came as kind of a surprise that someone, at operating at that level, Jensen Huang, the freaking CEO of NVIDIA, who's involved in basically artificial intelligence and, computing hardware, wouldn't have known that, quantum computing was already, here. So in case anyone wants to look at, some probably companies, I know, what was it? Qubits, I think, or this one. This is an ETF. It's a pretty popular ETF. I've seen a lot of other people cover this one. So it's from Defiance. Love them or hate them or whatever. But it is, it is out there. It is a very popular fund. I don't know too much about Rigetti computers or computing or D-Wave systems or IonQ. I have seen these names come up. I've just never looked at them done a deep dive on them. So just want to make everyone aware that there is quantum computing out there. So I think that this bet that IBM has is going to be, it's going to be good. It's going to be good, obviously, for not just the economy, but it's going to be good for people who are investing into this whole AI thesis, either through ETFs or single stock companies. Will this benefit IBM? I think it will. Obviously, it will. Just like Apple, they're sinking billions of dollars as well to basically, they're sinking, I think it's like $50 billion for AI or for artificial intelligence AI infrastructure in the United States, whatever that means. They're planning to build manufacturing plants. Again, I don't know what Apple really is going to do in the AI space, because a lot of their stuff, a lot of their products is its own ecosystem, right? Everything Apple does is within its own ecosystem. So I can't imagine them making an artificial intelligence chatbot or whatever you want to call it that's going to do anything outside of Apple's ecosystem. So, that's just a thought that came to mind. And again, companies are looking for ways to grow, and when they get too large, it's hard for them to grow. They have to either acquire other companies through M&A, mergers, acquisitions, or they have to do some type of investment, right? So this investment in the United States to bring back manufacturing, to build manufacturing plants and all that other stuff is a tailwind, but I don't know what the impact would be for them actually. Like, how would an investor actually see any type of growth from that? So that's left to be seen. But again, this is at least good news that a lot of tech companies are pumping money into the U.S. economy. This is going to create jobs. This is going to, be seen as a tailwind for, AI, the AI thesis, investing in AI. And this is going to be definitely a tailwind for just America in general. So hope you guys got some value from that. So this came out. Retail blockbuster Amazon earnings this week could reset expectations across the retail sector. Like I was mentioning earlier, this is going to be a very, very important one because this is going to give us some insight into how retailers are thinking, or how consumers are thinking. So there was a point down here with the tariff talk, which I'll cover this AI demand piece in a second. But Amazon CEO Andy Jassy said recently that the company has seen no change in consumer behavior. All right, which is interesting, despite all this talk of tariff talk, right? All this stuff about tariffs and everything else. He also said that the company expects third-party sellers to likely pass the cost of tariffs onto consumers. Well, duh. Like the sellers are not going to eat the cost, right? They're going to pass those savings, those costs onto us as a consumer. But if people, like, you have to look at yourself, if something from you're ordering from Amazon is marked up 145% or 125%, are you going to buy it? If you really need it, the likelihood is probably yes. America doesn't manufacture a lot of the, I don't know how to say this, but a lot of like the cheaper things you find on Amazon, right? If it's made in America, it's probably going to be costing a lot more. But China, like products from China, you have like battery packs, right? Something as simple as like a battery pack, like for a chargeable phone. There's hundreds of variations of them, hundreds of different companies that offer this thing, but most of them come from China, right? And if you're going to look for something that the US has made, I don't know of many companies in the US that have like actual battery charger packs for like cell phones. Most people, I think, would opt for the stuff that comes out of China, in my opinion. All right. But again, this is going to be interesting to see. I really can't wait to hear what Amazon has to say, because they're going to give us a look into what the consumer is doing. I listened to some financial pundit that was talking about using McDonald's, like hearing what McDonald's has to say, because they're the best barometer for consumer spending. I would have to probably agree with something like that, with a point like that, because most people, if they have disposable income, they're buying like fast food, right? I mean, you could look at McDonald's. You could also look at someone like maybe like a Target, or maybe like a Walmart. Those companies, to see what the retailer is doing, or what the consumer is doing, and how they're thinking, how they're adjusting their buying habits. So just interesting ways to look at stuff is really all I'm saying. Again, you could use barometers for a lot of things, and again, us as investors, it's important to know this stuff, because it helps us position ourselves. It helps us walk ourselves away from the ledge if we're about to sell, just like myself, because I sold PLTW right before a massive pump. But hey, it is what it is. You eat those lessons. So AI demand, Amazon is widely anticipated to reiterate that it is still seeing strong upside for both generative AI and foundational workloads. Kevin Miller, Amazon's vice president of global data centers, said recently that the company continues to see very strong demand and little impact from DeepSeek, the cost of inference falling, right? I really believe the whole DeepSeek thing was a total overreaction. There's still people out there, there's still, people smarter than me that run funds and hedge funds and manage other people's money and stuff like that. And they still see DeepSeek as a real threat. Me as just a small time investor, I really don't think DeepSeek was all that big, right? It was really all that that it's cracked up to be. I still think it's probably miles behind, or even years behind, what OpenAI has, or what Amazon has, or what Meta is building, or even what Google already has, because Google has, I think it's called DeepMind. So I don't know. I think the whole DeepSeek thing was completely overblown. And people are saying, well, AI data center demand is going down. This is going to impact. This is part of the AI bubble. The AI bubble's already popped. Everyone sell out of everything tech. Go to value. Go to value growth stocks. Go to defensive consumer cyclical or consumer discretionary stocks or utilities. The whole tech sector is completely blown up now. I don't believe in any of that, to be completely honest, because we're going to see a huge demand here very soon. All right. How soon? I don't know. I can't give you a date, but we will be seeing a demand. Technology is artificial intelligence is quickly becoming adopted every single day. It's being used in newer ways. Right. And you still have all these sectors that are adopting it in their own way, whether it's healthcare, whether it's technology, whether it's military, whether it's security, whether it's financial, whether it's even real estate. Everyone is adopting artificial intelligence in some way, shape, or form. I mean, even on YouTube, you can look, and there's just videos of strict artificial intelligence generated video content. Right? Voiceovers, you have all the pictures, all the entire video script, everything is completely automated at that point. And it's just, again, artificial intelligence is just being more and more adopted. And as it continues to grow and develop, it's going to require more and more computing power. So this is why I'm still really bullish on NVIDIA, despite what everyone's saying that it's overblown, it's overhyped, it's oversold, or it's overvalued and everything else. I just completely ignore it. I don't listen to the noise. And I think because, again, you have to look at the broader picture, the macro environment. You still have an administration that wants to deregulate the artificial intelligence industry, that wants to deregulate crypto, that wants to make it easier to do research development, that wants to make it easier to invest in, that wants to make it easier just to be involved with. So when you have an administration like that, that is a huge tailwind for the industry and for the companies operating in that industry. So again, this is why I don't think that the AI bubble is a thing, or that DeepSeek is the killer or the nail in the coffin. I think we're well on our way. We're still at the very beginning stages of what could be an artificial intelligence like bull run. So those are just my thoughts. So Amazon and NVIDIA says AI data center demand is not slowing down. Again, these are two of the biggest tech giants in the space, and they're both saying that it's not slowing down. This is why I'm not going to listen to, again, Wall Street analysts say that, the bubble's popped or that, there's not going to be any demand. You have two of the biggest players, again, in the space with the smartest people, all right, that actually produce the hardware, the software, that have the real numbers. And they're saying that this data center demand is not slowing down. Humans are adopting technology at a fast rate. All right. We continuously are looking for ways to break the barrier, to innovate more. And you need data center space. You need compute power. So this is, again, just another tailwind of why I think this whole AI bubble thing is kind of fake, in my opinion. Amazon and NVIDIA executives said they only see power demand rising due to artificial intelligence. Kevin Miller, Amazon's vice president of global data centers, said the tech company's data center plans have not changed significantly. We haven't seen a pullback, said Josh Parker, NVIDIA's senior director of corporate sustainability. Amazon and NVIDIA executives said Thursday that the construction of artificial intelligence data centers is not slowing down, as recession fears have some investors questioning whether tech companies will pull back on some of their plans. There's really been no significant change. All right. So we continue to see very strong demand, and we're looking both in the next couple of years as well as long term and seeing the numbers only go up. So right there from the horse's mouth, from Amazon or from Kevin Miller, who's Amazon's vice president of global data centers. He said it right there himself. So again, short-term volatility, yes. There's going to be some pain in the stocks that have to do with artificial intelligence or data centers. There's going to be some short-term volatility, some short-term pain, but there will be a long-term gain. So I think that's the way I'm viewing this whole thing. I'm looking at it from a 3-year, 5-year, 7 and 10-year window. I'm not looking at it from a 1 month to 2 month window. All right. If you want to swing trade these things, perfectly fine. You can swing trade these. There's nothing wrong. There's nothing in the rule book saying that. There is no rule book, but there's nothing in the rule book saying you can't swing trade these things. But, longer term, again, macro viewpoints, I think long term, this stuff is going to play out very well. And those invested in AI stocks or AI intelligence or any type of company that's dealing with this stuff, they're going to make out like bandits. In my opinion, of course, not financial advice, etc. You guys know. All right. NVIDIA leads chip stocks lower amid Huawei challenge. So this came out, and this is kind of one of the driving factors of why NVIDIA had such a crappy day today. Huawei is a Chinese company. They're developing their own, artificial intelligence chips. And basically, this is their biggest competitor in China. So NVIDIA led chip stocks lower on Monday after a report that Huawei Technologies is preparing to test its most powerful AI processor. I think it was like a 91D or something like that, or 9010D, which hopes it could replace some of the NVIDIA higher end offerings like the Blackwell. All right, so you guys know that NVIDIA, what they do is they have this export specific chip called the H20, which is, I think, the Hopper. And basically this H20 chip is allowed for export to China, but because of the tariffs and because of this surprise licensing that they're supposed to have, they can't ship anything to China right now. But so what China is basically doing is, they have their own competitors out there. They have Huawei, they have Tencent, they have, who else they have? I want to say Alibaba, I think, as well. But they have all these other tech companies out there that are producing their own, chips that can compete with NVIDIA. I don't think that they're going to be that successful, to be perfectly honest, because NVIDIA is just so far ahead of the game. They have the biggest ecosystem of products. They have the most, they were the first to the table. They were first to the game. They have home field advantage. They're just so far ahead of these other companies. These other companies are playing catch up, or they're trying to copy, or they're trying to reverse engineer this stuff so they could steal it, implement it, and then build it themselves. But their manufacturing, might be kind of behind what NVIDIA already has. Because again, NVIDIA got a lot of their chips made with TSMC. Taiwan Semiconductor Company. Taiwan Semiconductor Company is one of the best companies in the world. As a matter of fact, it is the best company in the world. That's why we're, kind of helping them move their manufacturing to the United States because, Taiwan is still under the threat of invasion from China. So again, Huawei Technologies, it's a great company, not a bad company, but I still think they're really far behind NVIDIA, and by a lot too. I mean, the whole reason why DeepSeek was all the rage is because it was created much cheaper using lower quality chips. And that was, that was what scared the markets off, thinking like, oh crap, China came out of the cut. They built this AI for $10 million where we spent billions. The game is over. Well, not really, because DeepSeek has its own problems. And now they're coming out with all these newer AI models that make DeepSeek look like trash. And this is all happening in China. So again, I don't believe a lot of things that come out of China. They like to rip off, they like to copy innovation, but they can't innovate themselves. They always have to copy or steal American innovation, American IP. So on Sunday, it was reported that some Chinese tech companies have been approached by Huawei about testing their new Ascend 9010D chips. The news came on the heels of a report last week, which said that Huawei plans to start mass shipments of its advanced 9010C AI chip to Chinese customers as early as next month. A new U.S. curb requires NVIDIA to get a license to export the company's H20 chips to China, a change that could result in a potential $5.5 billion impact to the U.S. company. Now, real quick, especially for NVIDIA, okay, if NVIDIA's revenue is about $200 billion, a $5.5 billion impact, I mean, you tell me how big that is, right? You tell me how big that is. I don't think it's going to topple NVIDIA. I don't think it's going to destroy their revenue. If they're making $200 billion in revenue, then I really doubt that the whole impact is really, as big as we might make it seem. Micron Technology, and I just included this piece because semiconductors, but Micron Technology, which makes memory chips used in AI processors, saw its shares tumble about 3%. Marvell fell 3%. Taiwan Semiconductor, Texas Instruments, Analog Devices, and Lattice Semiconductor declined by about 2%. Global Foundries dipped by 1%. Intel actually rose by 1%. So you guys know I'm involved with yieldmax semiconductor ETF Chippy. So this is why I just included this piece, because again, I wanted to capture the whole semiconductor market, because again, most of that manufacturing is going to be done in the United States. I don't want to bet against them. And not only that, they're going to basically corner the market for the world of semiconductors. Okay. Palantir is in the news. Palantir is soaring while its tech peers are sinking. I'm not going to go too in depth with this, but you guys have seen it. Palantir has just been on an absolute rip. Like, they've just been going crazy. Their stock, when everything was dropping, Palantir was rising. Again, they have earnings coming up next week, and I think they're going to absolutely crush their earnings. All right. I've said this in a previous stream. They have not only that NATO contract, which is a huge deal. And I really think that contract is being underestimated, because you can only imagine if NATO is going to adopt it and more governments are going to adopt it, especially in the EU, and then you also have commercially, financial services firms in Europe that's also using it. This is only going to be a huge tailwind for Palantir. There's going to be a lot more room to grow, because imagine when other countries start adopting Palantir for their commercial services. Countries, especially rich countries, like countries in the Middle East. You have Saudi Arabia, you have Qatar, you have the United Arab Emirates, you have even someone like India could probably benefit from something like this. Never mind the military piece, never mind using it for their militaries. But more so commercially adopted. Okay, you also have South Korea, you have Japan, you have the Philippines, you have all these other countries that can start adopting Palantir. And I think this NATO contract is just they're dipping their toes into foreign markets. And once it becomes more adopted, I really think Palantir is going to soar like crazy. But yes, just wanted to put this out there just so you guys can see it. Because, anytime Palantir is in the news, I like to cover them. Real quick, China's foreign ministry says Xi and Trump did not have that call at all. This has been in the news quite a bit, saying that, President Xi, or Trump was saying that him and Xi were basically having phone calls already, but the Chinese government and spokesperson for the Chinese government is denying that claim. So markets are kind of reacting a little iffy to this, because I don't know if Trump's lying. I have no idea. Secretary of Treasury Scott Bessent also acknowledged that he does not know if any talks had happened between Trump and President Xi. So again, if that is true, I think that's going to probably worry the markets, which is also going to add to the volatility this week, on top of earnings, on top of economic data. So again, buckle in, make sure you have your seatbelt on, because it's going to be a bumpy ride this week. Treasury Secretary Bessent says it's up to China to de-escalate the trade tensions. Again, we covered this before, but Scott or Secretary of Treasury, he has said this before, that China needs to be the one that comes to the table. And I think China and the United States, they don't want to be seen as weak. They don't want to be seen as having, less leverage coming to the other, saying, okay, let's talk, let's get these negotiations started. Because then it's going to make it seem like to the public, like, oh, okay, so the U.S. bowed down to China, but in China, if they come to the table first, they're going to say, or the American public, America is going to hype it up as China came to us looking for a deal, right? So it's who's going to cave in first, and it could be viewed as negative for the governments. So this is really just a war of egos at this point. Who's to say what is actually happening, whether Trump did or did not actually have a conversation? I have no idea. I haven't found anything that's concrete enough. But if you have someone like the Treasury Secretary saying this, then if he doesn't know, he doesn't deny it, but he just says he doesn't know, which honestly, that to me means that no conversations have happened. So maybe last week was a little overzealous in the markets, because we saw just day after day after day of just gain. So I think we might see some of that get taken away this week. So again, this is all news driven at this point. Everything is news driven at this point. So we're coming up on minute 36. Hopefully, hopefully we get through the rest of the news as fast as possible. Vanguard revises a U.S. market outlook amid tariff uncertainty. I'm not going to read this. This is a lot of word salad, but basically, Vanguard, large institution, a lot of ETFs, okay? Their projections for this year are the same as Goldman Sachs, right? The same as Goldman Sachs, the same as JP Morgan. All these large institutions are coming out with, their projections for, the U.S. economy, projections for growth, et cetera, and they're all forecasting lower, which is obviously not good, right? And a lot of them are forecasting a recession this year. So again, bumpy ride this year. This could be a great year to make a lot of money for a lot of investors who take advantage of the opportunities that are going to be coming. Do not be scared of a recession. Recessions are nothing to be scared about. Pullbacks are nothing to be scared about. This is healthy, right? Whatever that word means, however it's used in the context of this, of the stock market. These happen, all right? I think bear markets happen. I forget what the statistic was, but bear markets happen often. Recessions, they come and go every 10 years or so. Every 10 to 12 years, they come and go. And it's just something that, economic cycles go through, or economies go through. So this won't be anything scary. You're going to start seeing a lot more news about recessions and recession fears and uncertainty and things like that. Again, these next 60 days going to be critical, because these forecasts, they can change, and they will change as long as these trade deals, these trade negotiations happen. So this doesn't mean sell out of everything, flock to gold, right? That's not what this is saying. Just, again, be aware, control your emotions, and just be involved in the market, right? Understand what's going on in the bigger picture. I think we'll be fine. We will be fine. All right. We're going to survive. The stock market's not going to go to zero. For those who are invested in like index funds, shout out to you guys. You guys know this is probably more than anyone else. Everyone else invested in a single stock exposed ETFs or single stocks, especially when you start toppling or adding leverage on top of these things, it's going to be spicy. It could be very spicy, but you got to be able to weather that storm. There's a lot of financial pundits right now saying that people should start de-risking their portfolios, which means getting rid of the leverage, getting rid of margin, probably getting out of riskier assets like equities, maybe like single stocks, and probably flocking to safer assets, whatever safer assets means. In my opinion, a safer asset or probably a risk-adjusted asset, a better risk-adjusted asset would be something like an index fund, an ETF, something like SPY or VOO that tracks the S&P 500. So just my thoughts is all on this. All right. Cause we're going to see more and more of this, and this is nothing new. Every time something like this happens, is just always news and news and news about tariffs, recession, pullback, stock market crashes, et cetera, et cetera. So just be prepared for that. Alexandria Real Estate. I have a holding for Alexandria Real Estate. You guys know this. It's in my REIT portfolio. So I just wanted to cover this real quick. Their occupancy is getting hit pretty bad, and it's because there's a huge oversupply of lab space, especially in their area. So, what they're having to do right now is deal with that. So their occupancy dropped from 95% down to like 91%, which isn't good, but they did beat earnings. They did actually deliver really good earnings. However, they lowered guidance for the rest of the year, due to a couple things: oversupply of lab space. And what they're planning to do, according to Colorado Wealth Management Fund, is that they're going to sell assets to make up for this. So they're going to sell some of their assets, which honestly is probably a smarter move, according to what he's saying. But Alexandria is going to sell some assets to keep some cash, lower their debt. Again, this is a defensive move. This is a good move, especially for a REIT, and especially since we don't know what's happening with interest rates, right? We can't control what's going to happen to them. They can go up, then go down, right? But this is a smart move by the REIT. And again, when REITs and their management do really smart moves, we like that. We like that they're being responsible with not just the company, the REIT, but also our money. So shares obviously are going to be taking a little bit of a hit, but Alexandria Real Estate long term, and again, you got to think like 5 years out. You can't be thinking like a couple months. You can't be thinking like a year out. You got to be thinking years out. Alexandria Real Estate, I think, is going to be a solid pick for the lab space sector. They kind of get lumped in with offices because they're kind of treated as an office. But the difference between Alexandria Real Estate and someone like Boston Properties, which has primarily office spaces, you can't take lab stuff home, right? You can't work from home in a lab space. These lab spaces are very clean, highly secured, and they have to meet certain standards. So you're not going to be working from home with a bunch of bacteria, germs, and things like that. You have to go to these lab spaces. So again, I'm really bullish on Alexandria Real Estate. I really think they're going to do well over the long term, and I think they're boasting like a 7% yield right now, if I'm not mistaken. I could be wrong about that, but their yield is pretty attractive. The broader challenges faced by Alexandria Real Estate are likely to persist given the significant oversupply of lab space. However, management's increased willingness to pursue asset dispositions, sale of their buildings, is a notable positive. In a discounted REIT environment, selectively selling assets and shrinking the balance sheet makes strategic sense. A combined focus on share buybacks and debt reduction is a prudent approach for Alexandria in the current market conditions. So again, I'm holding Alexandria. I'm not selling out of it. It's the only pick I have for lab space. I don't know of any other competitors for Alexandria Real Estate, but I think the moat that they have is pretty substantial. Again, it's lab space, specific lab space. So, all right, guys. Let's move into the market updates. But before I do, let me hit the comment section. All right, so for the poll today was, do you think Palantir is a overblown hype stock and will come crashing down soon? 27% of you said, hell yeah, crash and burn. 45% of you said, nope, we're going to the moon. And then 27% of you said, not even sure what Palantir is. So I'm going to go with the 45% and say, nope, we are going to the moon. Again, I think Palantir has a lot of room to grow, and I think they're going to crush this earnings. I think this is going to be one of the earnings that a lot of people are going to be watching, right? So again, if you're invested into either Palantir cover call ETFs, like yieldmax plty, or in the 1-2x levered ETF from Roundhill, ticker PLTW, you're going to want to hear those earnings. You're going to want to read those earnings. And of course, I'm going to cover those earnings as soon as they come out in a live stream. So stay tuned for all of that. So just checking the comment section. Shannon says, I don't think Palantir is going to crash and burn, but at some point it's going to come down. Right now, I think it has an army like Tesla to hold it up. Yeah, I would agree. I would agree with that. There's going to be a pullback. I mean, I don't know this whole I don't know if I believe that it's overvalued, or that because you know, someone in the community, Alex, he posted that Robinhood has like a fair market value for Palantir at $90. And then there's all these other analysts that will come out and say, well, Palantir is fairly valued at this or that or this or that. I mean, these are all arbitrary numbers, right? These, honestly, they're all, I don't know. Some of them are Fugazi numbers, but you know, I like the story behind Palantir, and that's kind of the way I approach some of this investing stuff. Is what is the story behind the company? The earnings and all that stuff that will follow. Like, revenue for Palantir has been really great. It's going to continue growing, and you know, they actually increased their guidance from last year by I think it was like $1 billion or something. So they're going to crush it this year for sure. They're going to crush it. And yes, there is the threat of, you know, contract cuts, you know, government reducing a lot of spending, etc. But again, if you look at it and you look through the weeds of stuff, you know, they're cutting the fat in like really in areas that are just kind of redundant or silly, or that are truly wastes of money. And they're reallocating that money into other areas. And Palantir's focus is exactly in alignment with what the current administration wants. And, you know, I shared with you guys kind of the move that the administration is going to be placing on the intelligence agencies. They want them to start using artificial intelligence, and Palantir is the top pick for these intelligence agencies, right? And not only that, you have, you know, several of our military branches adopting Palantir. So again, nothing but room to grow. And as NATO adopts it, it's only going to make the interoperability between the militaries, you know, the EU military, the United States military, NATO, etc. It's just going to make them able to operate off of a single picture. So again, the adoption rate for Palantir, very high in my opinion. All right. Shannon Thomas says, NVIDIA and Amazon are easily my biggest positions when you consider my ETFs and individual stocks. Citizen of the Year says he did not just say Fugazi. I did say Fugazi. It's made up, man. Woo, whatever that from that movie, Wolf of Wall Street. NVIDIA and Amazon, I think, are excellent picks. You know, there is. Oh, I hope my mic isn't turned off. Did my mic shut off? I hope not. Anyways, so yeah, NVIDIA and Amazon, great picks. I think they definitely have room to grow. NVIDIA, obviously, I think has a lot more room to grow. They're quickly, their ecosystem of products is continuing to grow, and they're going to be the premier company when it comes to artificial intelligence. Like, they're going to be synonymous with each other. Whenever you hear that word, you're going to think NVIDIA and NVIDIA chips. So again, I really think they're really good. All right, cool. All right, awesome. All right, guys, let's move into the markets real fast, and then we'll do a quick portfolio update, and we'll close out the stream. All right, so S&P 500 up 6 basis points, I think, right? Yeah, about 6 basis points. Not too much, right? As long as we ended in the green, I'm pretty happy with that. I think we have this is like a 5-day winning streak for the S&P 500. So again, I think this week is going to be a little choppy. We're probably going to have a pullback here or there, only because we got the economic data coming out, and then we have earnings for the big three, right? The big three out of the Mag 7. We have Meta, Amazon, and did I see Google in there? I think I saw Google in there, or maybe I'm wrong. Amazon, I forget. One of those companies. But anyways, we have those earnings coming up. That will be a big deal. NASDAQ 100 down 27 basis points. They lost their winning streak, all right? So NASDAQ 100, again, tech-focused ETF or tech-focused index. Bitcoin still above 90,000. Right now we're sitting at just around the $95,000 mark, which is excellent. All right, shout out to all the Bitcoin holders out there. You guys are truly pioneers in this space. There was a or if you're holding MSTR or MSty, shout out to you guys. Again, I can't deal with that volatility. There was a post by DC Economics that I looked at, and I thought it was a really good post, but basically explaining, you know, kind of the idea of why this pump is happening, and it has to do with, you know, China's monetary policy. So I posted that in the Discord if you guys wanted to check that out. But I thought it was a rather interesting idea of why Bitcoin is surging, you know, because maybe it isn't new money coming into the system or new money being pumped in. Maybe it's just a change of, Chinese economic monetary policy. So we'll see. All right. But yeah, really, really interesting that Bitcoin is staying above. Sorry for everyone who probably was trying to short it and then didn't work out so well. Gold, still the best performing asset year to date. They had kind of a pullback over these last couple of days. And again, this is a sign for me. This is just a sign that, investor sentiment is moving away from gold, which is, an inflation hedge, a currency devaluing hedge, a recession hedge, all that kind of stuff. They're moving away from this and moving back into equities, right? Which we obviously seen because the S&P 500 had 5 straight days of winning. So I hope you guys are tired of winning because I definitely am. But yes, that's what this is at least telling me. Again, who knows? But it's just, I like to use gold as kind of a sentiment for investors of what they're thinking. We covered gold for quite a while, and it's just been the absolute best performing asset this whole year. So hopefully we'll see if we have a recession or if those recession fears come true, because that will probably definitely pump gold up. There's all this talk as well, out there about gold having a huge pullback. No idea. We'll wait to find out. US 10-year Treasury, thank God this is finally coming down again. Hopefully we can keep it down this time and continue going lower. Again, we use this as a barometer for mortgage rates and for real estate. So whenever rates are down, REITs are up, and whenever rates are up, then REITs go tumbling down. But it looks like we are trending again back in the right direction. This is an important treasury to look at. For VNQ, which is a Vanguard real estate ETF. So year to date, we're doing okay. Still the second best performing asset year to date. Actually, I don't know. I think Bitcoin probably took the trophy. Yeah, Bitcoin has the trophy there. All right. So now it's gold, Bitcoin, and then real estate. All right. So real estate had a little bit of a snapback this week, which was a welcome sign. Again, very slow to recover. Nothing sexy in real estate, right? Very old man's way of investing. So it's good to see that we're actually trending up. Okay, so let's do a quick portfolio update and then we'll close out the stream, guys. All right, so this is the portfolio update. Took kind of a huge dip. Right here. Like I was at like 82, almost 83,000, and then just dipped down to like 78,000. $4,000 just evaporated out of thin air, right? It's like, what the hell? No changes in the positions. Everything's still kind of remaining the same. Nothing really all that exciting. I think I picked up some XRP over the weekend just because I was just like, I don't know, I might as well just buy some XRP. So I picked up, I think, like 50 new coins, put like $100 in. PLTW staying the same. Cepi remains the same. No new shares. Ondas, I'm starting to like a little more Ondas. I want to see how their earnings are going to come out sometime in mid-May. I think it's May 14th is when their earnings are due. I want to know what's going on with this company. I'm really looking forward to hearing their earnings. NVW, NVIDIA, levered position again. They seem to be on a recovery. They were down 25%. So congratulations to anyone who picked up shares at that point. XPay, XCTE, S&P 500, cover call ETFs, doing well, just following the market, right? No excitement, nothing sexy from them. So again, I have to do a dividend update video for this portfolio, which I'll do towards the end of the month probably today or tomorrow. I'm waiting for PLTW and NVW's dividend to clear, and then I'll do the video. All right, so that'll do that for the Robinhood portfolio. And then for M1 Finance, which is where I keep the REITs and where I keep everything else. Let me just log in here. All right, so I hope you guys can see that. All right, so this portfolio has actually been recovering very well. Of course, big sizable position to VGT, which is a tech-focused ETF. That one's been hit the hardest. At one point, this was down like $40,000. So I'm very grateful to see it trending back up. And, hopefully we'll get back into the green in the next couple of months. Just down $25,000. And REITs, again, they've been fluctuating up and down. One day it's up, next day it's down. So, they're kind of just staying even. It is trending in the right direction. And again, for Alexandria Real Estate, like I mentioned earlier, let's take a look at that one real fast. I just want to know what so it's down 45%. I think it's probably an attractive time to get into it. If you don't have a position, if you're interested in something like this, I think it's a good price point. Again, take that with a grain of salt. No, I'm not a financial analyst, etc. Blah blah blah. You guys know that. Looking at, there was something in here I wanted to see. Where is it? I'm looking for the dividend yield. Dividend yield. All right. Man, it's been so long since like I actually looked at this stuff, so okay. Oh, there it is. I'm so dumb. Yeah, so it's about 7%. So Alexandria Real Estate, you know, worthwhile REIT. I think it's a great REIT, and it's boasting as almost a 7% dividend yield, so it's something definitely worthwhile. It does pay quarterly. All right, it's not a weekly paying REIT, it's not a monthly paying REIT, but it is a quarterly paying REIT. But again, if you're into REITs, I think this is a very attractive REIT to get into. All right, so that'll do it for the portfolios. I got nothing else, guys. Let's see, daily msty reference from Alex. So I think that's going to do it for me, guys. I got to get my day started, but I appreciate you joining the stream. Appreciate you guys hopping on and shooting the breeze with me. I will catch you guys in the next stream. You guys have a great rest of your evening, a great rest of your day, wherever you are in the world. I appreciate you guys once again, and I will see you guys